Hmm. Mic test, mic test. Okay, mic is working. Well, good evening, good morning, good afternoon, everybody. Welcome to today's Marketwatch stream. It's going to be a quick one. In about 3 minutes, I'm going to go right to the chase. In about 3 minutes, we have the ADP Non-Farm Employment Change data coming out. And what I wanted to do ahead of this data release was just to go through some of the things that we were looking at. Once again, welcome to the stream. Apologies for the technical difficulties. My camera is not working. But yeah, so the key stuff that we're watching ahead of this stream was the push down on euro dollar during the London session. That was quite interesting. We have the DXY rallying back to its high point from last week. And of course, gold. I haven't been trading this as of late, so my levels are not updated. But now it seems to be breaking this level 2652. So that's quite nice. Won't go too deep into it. We've updated the members in Discord in terms of the Nvidia move. So that was quite interesting as well. And of course, I've been watching SPX quite a fair bit. This is on the hourly. Resistance at 5,940. Held pretty well. And we've got a whole bunch of ORs to work with. Anyway, we are 1 minute away. So I'm just going to pull up the data. So expect volatility to kick in soon. I'm staying out of this move, as I usually do because of all the algo trading bots. Things can get a little bit spicy, but I'm expecting quite a fair bit of volatility today. Going to be jumping back onto Discord to trade alongside the other traders on Safehouse as we navigate into the New York session. And it is dropping now. So ADP Non-Farm Employment Change came out under expectations at 122K. So less jobs in the private sector were created. Previous was at 146K. Expectations were to taper down to 139K, and that dropped a lot more than expected to 122K. See what's happening on the DXY. The DXY, as you can see, is pushed down quite a fair bit. We're on the 2 minute here. So it's pretty evident at this point that there's a key support level right around here for the DXY. Right now it's pretty much sideways, not gonna lie. DXY has rallied quite hard as of late. So we're just pulling the fibs here. You can see it's well and above your golden pocket 618 zone. That's okay. We didn't really clock a massive move, which is good. That was a 0.7 move, so it is quite minor. So nothing to get all ruffled up about. I think yesterday's session was pretty exciting. Manufacturing services PMI, that was actually last week, came out expansionary. And of course, yesterday's ISM services PMI came out expansionary as well above expectations at 54.1, with previous at 52.1 and expectations at 53.5. So that's a jump from 52.1 to 54.1. So that's good news for the services sector in the US. More importantly, Jolt's job openings opened yesterday as well. The previous figure was adjusted to 7.84 million. Expectations was 7.73 million, and there was an upside surprise yesterday at 8.1 million. We posted about that on X as well. So what does this mean, right? Well, first you got to understand what ADP Non-Farm release is. This is in a series. So jump over to, was it Forex Factory or your Trading View News? What do you call that? Tab. This is available right across most platforms, but I think anyone who's day trading this week is quite fun because yesterday kicked off a entire slew of labor market data that's coming out, rolling into Friday, where we get the coveted non-farm payroll and unemployment rate, right? Unemployment rate is not considerably high, still under 5%, holding at 4.2% and expected to hold at 4.2%. So yesterday was Jolt's job openings. Today is non-farm employment change. We have the regular unemployment claims coming out later in about 12 minutes. 12 minutes? Yeah, 12 minutes. Unemployment claims previous 211K, forecasted to be 214K. So not much, no major expectations outside of the ordinary there. So yeah, one of the things I wanted to talk about for today's Market Watch is one of the things that I constantly keep getting asked is, what the hell is ADP Non-Farm Employment Change? So it's a monthly report that estimates the total number of jobs added or lost in the US private sector, right? And of course, non-farm suggests that it excludes jobs in the farm sector, private households, and non-profit organizations. ADP is just the name of the company, Automatic Data Processing, I believe. And it's a payroll processing company, right? So why does it matter? This report serves as a key leading indicator of labor market conditions and is closely monitored by economists, analysts, investors, and policymakers, which in this case are the Fed. Key point is that it focuses on the private sector, whereas the NFP that we all know and love, coming out on Friday, is both the private and public sector, right? What else can I talk about ADP? Let's see. So a key thing to note about ADP is that there's a slight sample bias for ADP data, just because it draws from ADP's client base, which is skewed towards larger businesses and may not fully represent the entire economy, but it's a quick snapshot, right? Also, the fact that it excludes government jobs, is why it's often known as the younger brother to the big NFP that comes out on Friday. But nevertheless, we watch this for the purposes of, you know, getting an inkling as to the potential direction for Friday's NFP release. So why does this matter, right? So let's recap the labor market data so far. So yesterday, US job openings rise to 8.1 million, defying expectations. So that was pretty cool. This job openings figure is for November 2024, and it was the highest since February. The key point with this rise is that it highlights steady labor demand despite a cooling economy and persistent inflationary pressures. So I think the Fed has made it quite clear that, you know, moving forward, their concerns are primarily with inflation. And the labor market seems to be holding pretty decently and well. A key thing to note about this is, let's go look at yesterday's job openings reaction on the DXY. Yeah, where was it? It was 11 my time. Oh wait, that's the day. It's just the 2 minute. I'm still on the 2 minute. Let's pull it up. Tuesday here. There it is. Yep, so strong ISM services PMI data coming out, very positive, as well as the job openings upside surprise. You had this little coil here, and then you had that blow up. The greenback consolidated thereafter, quite whippy, and continue to trend upwards. Right, and then earlier today, you know, we had that very, very strong push up. Just okay. So what else should I cover about this? Let me think. Okay, so the major thing to look out for Jolt's job openings is that Jolt's job openings is just one side of the puzzle. It alone is just very sensational kind of data, but you have to compare that against hiring data, right? So job openings means that there are more jobs being listed and more positions open for the labor market to absorb, right? Then comes the question of what is the absorption rate, and that's where hiring is. Where we are today, hiring, if I'm not mistaken, was at about 3.3%. And many economists were signaling that despite the upside surprise, what US citizens feel is the hiring rate, right? And hiring has been weakening. Workers are even more reluctant to quit their jobs, and layoffs are low. So you don't have massive unemployment happening. So it very much feels like a wait and see kind of scenario. And I think a lot of the market is in this kind of limbo as we roll day by day closer and closer towards January 20th, which is Trump's inauguration. And I think today there was that thing about Greenland that Trump talked about. You know, it's already making waves before taking office. You know, no surprise there. I wouldn't expect anything less from Donald Trump. But yeah, even the Fed is unable to map out, or has not provided any language in terms of mapping out or anticipating what kind of policies and what the execution of said policies would entail, right? You have the Bank of Japan, Governor Ueda is also, you know, on the sidelines, keeping very steady their interest rates. You know, waiting and seeing to see what happens as the next administration kicks in. So yeah, January 20th is going to be a very exciting period. Can't wait for it, to be honest. But the key point is that, you know, a very strong job openings figure shows that there's no like sudden collapse of the labor market or an imminent recession, just around the corner. And because of this, Powell and friends would be in no rush, right, to cut rates, which then provides them the flexibility of holding rates longer, higher for longer, right? So let's recap. The only central bank that still has rates well and above the US are the Brits. So the sterling's interest rates are about 4.75%, I believe. Canada's below. Europe is, the Eurozone is at 3.15%. So everyone's cutting a lot faster. I think I've been watching Bloomberg because we left the Bloomberg terminals here at Safehouse, and things aren't looking very, very pretty in Europe. Then again, there are a lot of given the heavy concentration of capital in US stocks now. Again, not financial advice. Hope you guys read the disclaimer earlier. Just my thoughts, but yeah, there are quite a number of European stocks that are looking very value for money at this point. But that is one of the key concerns. What else should I cover? So yeah, the key point for ADP, right? It's that it's private sector, it's a sample bias, but over the preceding months, for some time, I can't remember the exact how long I've been watching this, but normally we get pretty decent volatility out of this. Thankfully, it's not like a whip up and whip down kind of situation. Let's hop on over to the SPX, which I was watching. So previous day, this is old, I need to change this. I'll change it later when I'm on station. But yeah, previous day OR low at 58.95 has held pretty well, forming higher lows, so that's great. I would really like to see the EMAs flip, which they on the 5 minute they're attempting to do so. Let's look at the 2 minute, they've already flipped. I'm looking for these EMAs to cross. Call that the EMA cross or EMAX, because that's a lot easier to say. And EMAX cross backtest, I'm in, and my major target would be 59.40 because I have a very solid resistance line over there. I think this is since Wednesday. Let me see. So Wednesday New York was right around here, right? This, for context, this was formed, I think, all the way back here. Yeah. So this is an old level that I've been holding on to. On a higher time frame, as you can see, there was one, we talked about it on the X as well. Yeah. We had one touch, two touch, one deeper one into the 718, which is a level I've been experimenting with. I quite like it. Dinged off 6,000, trended back down, back again to touch to test the golden pocket, 618.65, and then we push back up. And the traders are calling me to go on comms on Discord because why are they calling me this early? It's not New York yet. It's only pre-New York. Relax, guys. Okay. I don't know if they're here, but guys, if you can hear me, I'm coming soon. Okay, I'm coming soon. So yeah. Okay, where was I? Yeah. So primary target 59.40. I don't like this kind of retests of this kind of retracement from the fib, because generally with fibs you want to see it touch and then trend higher and then break the zero, right? But it has not broken the zero. So tried once, it tried twice, and now it's on its path to go and try one more time. And if the bulls are not there to defend it, then it's gonna fall right through, right? We have a couple of fib levels that are pretty decent. I'm not a fan of trying to call like, oh, it's definitely going to bounce off the 786 or 718 or, you know, definite support level. I mean, at the end of the day, I don't have a crystal ball, right? It's where the bulls are, and that's why we watch price action, so that we can try and anticipate, you know, where the bulls are by watching the tempo on price action. So I don't know where the bulls are right now. They look like they're within between the 718 and 718 and 618, so that's pretty decent, right? I would say more so right around the golden pocket, what we call the golden pocket, which is 618 to 65. But we'll see as it comes along, right? This is on the 15-minute. Let me go deeper to the 5-minute. Reset this, right? We can see that as there was a strong push down into previously OR low of 58.95, right? You got your bulls coming back to defend it here, so that was nice, right? Now the question is, can they produce a solid Emax? So generally for Emax, for those of you who are interested, there, see, that's the 2-minute backtest, right? Personally, I like to see an Emax on the 2 and the 5, right? So there's still a bit of ways to go. I'll probably go make myself a coffee, because from testing this Emax strategy, what do you call that? I've produced a lot of false positives with just the 2-minute alone, right? So I like having 2 time frames of confirmation for the strategy and then find an entry from there. So yeah, a lot of what I do is just, you know, watching tempo and watching price action. But yeah, that's recently I've been primarily trading SPX just because it's, you know, all the rage at this moment. I used to trade a lot. I've done about over 10 years of Euro, so I call her my ex-wife. She behaves very differently today, but this is quite interesting. As you can see, you know, there was a steady decline because of the push up from the US dollar, and of course the Euro was just hugging the EMAs down after its cross, right? So this is a very nice textbook version of an Emax, but now it's starting to look like it's gonna flip. We didn't make a lower low, so I wouldn't say this looks anything like a bullish RSI divergence, which means that this could potentially be I'm not a flag expert, but it could potentially be a bearish flag. So we'll see how it pans out. Take it one step at a time. I'm not supposed to go into trading on this stream. I'm supposed to talk about the news, so we'll do just that and keep it to that before my team knocks me on my head. I have about 9 more minutes or so. I don't know how many people are watching. Oh, but the cool thing is that I'm testing the stream on X, but I don't know why my camera is not working. It is really weird to see a gaping hole on the top right. But yeah, anyway, for those of you who are interested in trading alongside other independent traders, don't want to trade alone, it's quite a different experience. Our guys are live now, so if you want to join a community that you know, is constantly sharing insights, focus on the markets, you know, but most importantly, you know, we watch each other's backs, right? So if I spot something that my fellow trader didn't, as he's setting up to take an entry, I would highlight it to him. Or if something's moving on another asset, because we don't focus on a singular asset. Like for example, some of the other guys focus on Bitcoin, and they've been having a field trip with this. I personally don't. I focus more on the old school stuff. Primarily, it was these 3: dollar, yen, euro, and the DX, monitoring the DXY, and of course I monitor the macro scene very closely for the team. But yeah, there are other guys that focus on commodities, and if we see something that's moving, like we highlight it to each other. So that's just an example of how we trade as a team. There's another trader, Anzar, who is adept, fantastic with NASDAQ. I can't, but he does it much better than I do. So that's cool. Sometimes I can, you know, squeeze in a trade or two on NASDAQ. But yeah, ultimately it's about a community that operates in teams, right? Traders that operate in teams and locking gains together. So if that interests you and you're all done trading alone, you're done with a lot of the, you know, hype market calls, I told you so kind of nonsense, then yeah, you know, do consider joining the Safehouse community. We've got a free trial right now, so if you go to, it should be in a link below if it's not, Safehouse access, safehousecapital.com/access pass, and you can go claim your free trial. One of our guys would reach out to you and get you all set up. So if that interests you, do consider. It's free. And if you find it valuable and you enjoy it, then yeah, you know, it's what, $8 a month, I think. I don't know. Yeah, that's the price of a couple of drinks a month. So yeah, looking forward to seeing you guys there. If you're interested, of course. And let's just get back to the markets real quick before I jump in, because I want to make sure that I'm prepared when I jump back in with the boys. It is not just boys. What do you call it? We have female traders too, but I have this habit of saying jumping in with the boys. But okay, enough rambling from me. I'm Asian. I can't deal with this woke thing. Anyway. Okay, so earlier what we were talking about was that we saw the what do you call it, backtest of VWAP for that potential Emax, but like I was talking about the false positives, you see, like this is the kind of thing that can happen. So if I go in hard and heavy, you know, I would have been cleaned out, right? So what does that mean? That means I want to see it on 2 time frames. Generally, I think that's a very decent and disciplined way, a prudent way, sorry, I think that's the right word. It's a prudent way to approach a strategy, which is to have multiple time frames of validation, right? So even for my RDivs, which is the RSI divergence strats, like those I want at least 2 or 3. It's rarely I get 3, to be honest, but most of the time 1 you get a lot, right? And then sometimes 2 it takes a little bit longer, but then like they usually move in a much bigger way. Same for Emax, right? I like having 2 and 5, but if I'm operating 2 time frames at 2 and 5, then you know my holding time for that trade isn't going to be very long. That's just how I do it. You could do 5 and 15, and then you know your holding time is a bit longer. I like to point out that how I was trained back in the day was that the longer you hold, the more risk you take, right? So with that trade, so yeah, I'm a I don't know what did you call it this day, scalper. We just used to call it intraday trading, but cool. Scalping, yes, it's a very weird word till this day. I just can't get used to it. So yeah, I want to see this. It's been pretty sideways. I mean, this is the 5 minute, so it looks like it's been whipping and whipping, but if you zoom out and look at the bigger picture, right, you have a trend line running like this. Pretty basic stuff. If it breaks this, backtests 2652, then you know the next target then is 2604. These are old levels, so I just roll them until they fizzle off. Yeah, but it seems like gold is struggling to stay above 2652, right? Just like what we wrote about for Bitcoin on X, which was 24 hours. This was crazy. Like 24 hours, gold. I think, where was I watching it? Oh, here, yeah. I was watching it here towards the end of the year, right? And I was really hoping for Bitcoin to, I thought it'd be really nice for, all the people holding Bitcoin for 2024 to close out back above 100K, because that was 2024's major achievement. And then on the 26th, December 26th, it dinged it and it just went straight down to retest 92,230. Then after that, recovered, popped on up, hit resistance at 102,636. Yeah, that was from here, and then retraced all the way back down. So it's actually behaving pretty well. Yeah, it's actually behaving pretty well. This is 1 day, exactly 1 day, right? It popped over, gave Bitcoin investors a wall of a time, like, we're back above 100K, boys. And then after that, it just sharply fell under and is continuing to trend to the downside. I think that's healthy, not gonna lie. Like, if you look at the grand scheme of things, let's say we take the rally from 92, right? This should be about 618. No. Okay, let me just put this one here first. Like, I like to just take general area. Okay, so yeah, it's ripped through the 618 already, but it's bearish in this retracement zone. Like, right now it's on the 718, which is quite neat. The question now is then, can we take out the previous high, and change the market structure, right? So that's the whole point of these fit retracements. So if we do, and we claim 96,900, so that's the major level I'm looking for, then I would probably be looking for an entry here to gun for 100K again. I think there is a lot of euphoria around Bitcoin at this point, and I'm quite excited to trade around that. So that's my quick take. I'm not the Bitcoin expert on the Safehouse team, but from time to time I take a pot shot or two. Yeah, Euro is what I generally prefer. We have FOMC minutes coming out in the PM session, which is 3 a.m. my time. We should have had unemployment claims come out, but nothing too severe. Let me see DXY. Yeah, nothing too severe. So we drew that support zone earlier, right? And that seems to be holding. Let's go a little bit deeper. Yeah, so it's still sideways. We got a nice push from ADP, 0.07%. There's nothing to speak of. So that's fine. Unemployment claims came out under, in fact. So less unemployment claims. So less layoffs, weakened hiring, a whole lot more job openings. That's fundamentally... Oh, and less private sector jobs created. So hiring's weakened, more job openings, less unemployment. It's kind of like I wouldn't say it's stagnation. It's just the US labor market just seems to be in this limbo, So yeah, I'm sure the FOMC will talk about this, and it is unlikely that, or rather, there's not unlikely, but like there's no reason for Powell to go and aggressively cut rates, right? Because their dual mandate, one in being inflation and the other being employment. Employment still seems pretty decent, unless all of a sudden we get a freak reading, then they'll sit up, right? Inflation still is the key concern. I think no matter how you cut the pie, Trump 2.0 policies, and for those of you who follow along would know this, right? I mean, whether is it tariffs or the immigration policies for deportation, all of those are inflationary, right? The question with tariffs, of course, is if Donald Trump would use it as a bargaining chip, which means it's an empty threat. He's like, I'm going to hit a tariff on you if you don't do this, or he's actually going to implement it, right? Which he doesn't need the House to do so, I believe. So that's the poker game right now. What's his next card, right? and so if that kicks inflation back up again, then a lot of the progress that Powell and team have made, they will have to adjust accordingly, which means potentially holding higher for longer, or potentially increasing rates. Based on the way Powell operates, I think we might get one more cut from him. Potentially one more cut or pause. But again, like, everything is up in the air until Trump comes to power and the world has a little bit more clarity in terms of how this administration is going to take things forward. So yeah, if you guys have any questions, you can always talk to me on X, or put it in the chat, or talk to me on Discord, and I'm very happy to walk you through it. I'm not the foremost expert. I'm not an economist. I'm a trader. but yeah, I'm always very happy to share my experience and what I know with you guys. So yeah, let's see, what else are we looking at? I heard oil hit a high, no? Oh no, it's tapered down as well. Okay, that's old news. There's one thing I'm pretty excited about. We have had this internal bet on Fed cuts amongst the Safehouse team. It was just a fun thing on the sidelines while waiting for trades to pan out. And let me go find it. And I think I won, so I'm very proud of that. Of course, it was it was just for fun. But let me try to see if I can pull it up. Oh, is it here? Oh, I don't want the latest one. Oh crap. Okay, I have the... Here, I'll just show it to you guys real quick. Did I win? 525. It was 522. Ah, there. I got it. Yeah. 522. So 50-25, and I haven't updated the last one, but we were betting on like the outcomes. So yeah, 522 was the figure. I'm sorry, I'm just proud about that. Yeah. Okay. All right. What else should I cover? I think I've pretty much covered everything. ADP for the next ADP, right? When is the next ADP? If I'm not wrong, ADP Non-Farm Employment Change is released monthly on the first Wednesday, right? So yes, it reports the employment data for the previous month, right? So it's a monthly report. You're gonna get this every month, and that's great. Next month's, right? Next month's, or yeah, next month's one. Yeah, I think next month's one would come down further. Yeah, perhaps. I mean, this one is lower just because. So, how do I say this? This report is for December, right? And as you remember, in December we had fading labor strikes and extreme weather, and all that good jazz. So yeah, there's no surprise there. Hiring is weakening, so I don't expect it to, have a super upside surprise for next month's report. And yeah, I don't see a major upside surprise for next month's report. And of course, next month's report would take into consideration January 20th. But it takes time. It takes time for these things to kick in, right? for policies to be executed and implemented. So we'll see. The key figure I'm looking out for this Friday. So if you want to trade alongside other independent traders and myself, do check out the Safehouse Access Pass free trial available. Link is in the description. But the key thing I'm looking out for is the unemployment rate, right? If that thing pops above 5 or starts to show signs of, creeping up, then that would be an issue, right? So yes, US equities are still very, very hot, very healthy correction, to be honest, in the grand scheme of things. But there are three, primary concerns that I have for the US market. Let me share them with you. Pull up my notes from earlier today. Yeah, so the three ones that I'm personally watching are extreme valuation risk for the S&P 500, which is why I'm watching SPX, and mega cap tech stocks and your Mag 7. Unsustainable US debt and deficit problems, right? Amidst all the Bitcoin going to the moon and S&P 500 making new highs, there is that underlying issue, right? Which is, Doge can only do so much for the deficit problem, the sovereign debt problem that the US faces. And there's a lot more work. I'm really looking forward to see how, the Trump administration is going to move the needle on that problem, together with Elon Musk and the lot. Potential US dollar devaluation is probably his best move, I suppose. There's a pretty wild one which I shared with the members before, which involves cryptocurrency. It's not completely out of court in today's context, to be honest, but yeah, that will take another hour to get into. Yeah, so those are the major things that I'm looking at for the US. China is pretty much lackluster despite all the talk of stimulus. I think earlier today during the Asia session, everything was down, so that wasn't great. And that's just because there's a lot of hype around the stimulus and people jumping in because it looks cheap, but structurally, I think China has got a bit of work to do. Eurozone's not great. Trudeau is getting ousted, I think. I think there was this one thing I heard on the wire, which was of the G10. There was only one G10 leader that has not been changed out. So it's going to be structurally quite an interesting few years ahead. But yeah, Eurozone, I think I have this, I'm preparing like a piece for the members to talk about, drawing from my experience trading currencies to talk about Euro-dollar parity, because there's a lot of content out there about how Euro-dollar is going to parity. That essentially is the Euro decline and the US getting stronger. But like, what happens, right? Because back in the day, like I was telling the members, back in the day, as currency traders, we were told that if the euro goes to parity or under parity, then all hell breaks loose. But we never knew why. So I had a chat with a couple of old chief dealers, and yeah, put together just a quick summary for the members. So I need to prep that brief for them. So yeah, I think in my generation, we might potentially see a euro breakup, because a lot of the old timers who saw the euro form, they in my interviews, all of them agree that it was a bad idea, like the formation of the euro, but it's them as traders, the sterling has left, and now Germany and Europe are carrying the Eurozone for everyone else. I think it's kind of like, how did they explain it? It's like when you have plenty of money and your economy is great, you're very well and happy to carry, right? But when your own economy is not doing so great, then you start to question yourself why you're carrying. And that's pretty much the rhetoric in that respect. But anyway, let's see. Any other things? No, I think that's pretty much it. I should bounce and get back to trading on station with the other traders. So once again, thank you for joining. I hope you found it insightful. Sorry for the technical difficulties. It's been a holiday season. Haven't used my streaming platform in a while. But for those of you who are still here, be sure to hit that like button, subscribe and ring that bell for more notifications. But honestly, if you want to reach us, just pick up your free your free trial of the Safehouse Access Pass. I think my teammate Luke will get in touch with you once you're in. Yeah, it's no obligation, cancel anytime, and if anything at all, it's only $8. So yeah, and yeah, we're doing the free trial just because we figured it would be nice to let people experience like what is it like to trade alongside others, and trade alongside other Safehouse traders, right? So okay, they are bugging me to come up. I should bounce soon. Look, we are back on track to get that Emax on the 5. Let's see, on the 2. Okay, so a full Emax cross is when, there we go, it's almost there. A full Emax cross is when both EMAs are ours are 9 and 21. So 9 is the yellow one and 21 is the orange one. So I want to see this backtest like I drew earlier. I want to see this backtest like that. But I want to see this happen on the 2 and the 5. So I'm still way too early. Like if I impulsively jump into this, I'm just taking on more risk than necessary. So yeah, the hardest part about trading is waiting. So you can't be disciplined to wait for yourself to play out, and be very mechanical and consistent with it, then, it's gambling is a lot quicker in the casino, right? So yeah. If you don't do it mechanically, you can't measure it, right? So anyway, I don't want to continue rambling. Oh, Prince Walia, hi. Where is George and Victor? Victor's still doing his thing. George is on stream, I think. Yeah, he's live in about 40 minutes. Yeah, he should be on stream as well, on Discord. So that's where they are. So okay, I am going to make myself a coffee and wait for this Emax to play out, and hopefully we would see a nice retracement. Wait for what time is it now? It is 8:59 a.m. Eastern, so that's about half an hour to New York. No, sorry, is it? Yeah, half an hour to New York open. So we get to ring the bell in half an hour, our own bell. So that's pretty cool. And yeah, let ORs form and see how we go from there. Well, thank you for joining me once again. Hope you found this stream fun and useful. And yeah, this is Safehouse Paul signing out. And once again, I hope to see you in the Safehouse Discord sometime soon. Peace.